Welcome everybody, and looking forward to another quick update here with a go no go video on a Wednesday morning. We're going to quickly look at the charts of the trends for Treasury yield. There's been a lot of discussion about how Treasury yield and rising Treasury yield can affect the stock market. So we're going to take a look at a daily chart and then a weekly chart. So if we look at the first chart here, this is the daily chart showing 10-year Treasury yield. And people have been discussing this for several weeks now about the impact that this will have on equities. Now, to be very clear, rates are higher, but they're not high. I think that the problem that is spooking the stock market is that these rates have been rising very, very quickly. But relative to the pandemic low of about 40 basis points, this rising yield to 1.73% has caused many investors to question the valuations of a lot of the growth stocks that we're looking at. But remember, historically, we are not at high yields. So if we look at this daily chart, we can see what a trend it has been with higher highs and higher lows. The go trend has been in place, for a long time, making those bright blue bars and the aqua bars pulling back, but not ever really dropping out of the go trend. And you can see in the lower panel, momentum has been on the side of this trend, staying above zero, rising to overbought levels and then falling to the zero line and finding support there, as you'd expect when the trend is healthy. So this is a very strong trend in yields, yes, but remember, historically, these yields are still low. Let's take a look now. Let's zoom out to a weekly chart of Treasury yields. And this is a very interesting chart because we can see that the trend has changed structurally. The technical environment is a go trend, even in the longer time frame. So the go trend is in place on the weekly chart as well. Now we can see that the yields have been falling for over a year. You can see that dark purple no-go trend painted, and you can see how it crashed even lower during the pandemic last year. But since then, over the course of the rally in equities, Treasury yields have started to rise. And we can see that there was momentum increasing, positive divergence as the go-no-go oscillator crossed above the zero line and led the change in the trend in the price panel above. But interesting to note now, we have entered what could be an area of resistance from yield levels from over a year ago. So when we zoom out to the larger time frame, we can see that this trend in yields is healthy and it is a go trend on the larger time frame as well. But there may be some struggles for yields to go higher, especially quickly, because there's a lot of that overhead resistance from just about over a year ago. And even this week, we've seen yields cool off over the first couple of days of the week. So in the short term, perhaps yields will take a bit of a break, but there's definitely some trends in place in the 10-year yield, on the daily chart, and the weekly chart. So we'll keep an eye on that and see how that plays out in terms of how it affects equities going forward.